Hello traders, welcome back into another video. This is our second example for New York Open reversal for bullish price action. First step, we want to know where the price is going. Are we going to continue higher or are we going to go lower? Are we taking out a liquidity or are we filling out an imbalance? Right here at the daily time frame, as we can see, price is moving higher. We have here sell side liquidity, price went lower, and it has taken out this sell side liquidity right here. We have here a rejection. This is a daily rejection, which means price really tried to go lower, but it failed. It closed above. Right here, we have a big candle rejection. Let's mark it out. Sell side liquidity sweep, and now the price has continued moving higher. Currently, we are inside this fair value gap right here. Let's mark it out. This is our daily fair value gap. Price went higher. We have here a retracement into this fair value gap, and now the price action is most likely to continue moving higher. Remember, price is only aiming for one of two things. It's either we are going to take out a liquidity or we are filling out an imbalance. Since we have already filled out this imbalance, the price is most likely to take out a liquidity. So, since we are going higher, price is most likely to take out this buy side liquidity right here. Let's mark it out. This is a buy side liquidity. Right? Now let's go into the 4-hour time frame. Let's go into the 1 hour to see more price action. And let's mark it out. Since we are trading the New York Killzone, we should go around 6 a.m. since we are trading Forex. AUD, USD, we are using 7 a.m. to 10 a.m. Forex Killzone. Let's wait until 6 a.m. And there we have it. Let's mark out bullish PD arrays that the price might react into. We have here a 1 hour fair value gap. Let's look closer. Also right here, we have a potential sell side liquidity. Let's mark it out. And this is our only higher time frame point of interest. We also have here a sell side liquidity. Let's mark this also. Now let's go into the 15-minute time frame. Remember, if the price wants to go higher, since we already know that the price is trying to go higher, we want to see price go down first before going higher. We want to see price go down to reach a higher time frame point of interest or take out a liquidity. At the lower time frame, we look for entry and the price should now continue moving higher. This right here is our guide so that you can visually see what we are looking for. We are looking for the price going lower, reaching to a higher time frame point of interest and taking out a liquidity. Going into the lower time frame, should look for a market structure shift and a fair value gap. At the 15-minute time frame, let's mark out hours 7 a.m. to 10 a.m. Around this kill zone, we are looking for this setup. Now let's wait. Let's go into the 5-minute time frame so that we can see the price action more. And we have here a possible sell-side liquidity sweep. This will be confirmed once we have a market structure shift at the last swing high that has taken out a liquidity. Alright? Let's mark this out. This is our last swing high. This is where we are going to look for our market structure shift. Let's try to look if this price action right here has reacted into a higher time frame point of interest. Let's look at the left side of the chart. If you look closely, right here we have a fair value gap, and in this candle also we have another fair value gap. When we have a double fair value gap, a bearish fair value gap, and a bullish fair value gap, this is what we call a BPR. This is a balanced price range. This is a PD array that we expect the price to react. And as we can see, we have a beautiful reaction. Price tried to displace lower below this balanced price range, but it failed and is now trying to continue higher. This is our market structure shift. Let's try to look at the 3-minute time frame if we can see any fair value gaps. Right here, we have a 3-minute fair value gap. Price already displaced above this 3-minute fair value gap. Now this 3-minute fair value gap is an inverse fair value gap. For me personally, I will enter into this 3-minute fair value gap because sometimes the price action will just continue moving higher with no retracement in this breaker block right here. If you want to be safe, you can wait for a market structure shift above this swing high right here, and then you can wait for a fair value gap, and then you can entry off that fair value gap. I will enter in this 3-minute inverse fair value gap since we already displaced above this fair value gap. Now the price should retrace into this, and it should respect this inverse fair value gap, and the price should continue moving higher. Let's see what the price will do. Only aiming for 1 to 2 risk to reward or the nearest buy side liquidity. I can aim for this buy side liquidity that's around almost 2.5 risk to reward. Let's aim for that high right there. As we can see, we have here a higher time frame point of interest. This is our higher time frame point of interest. We have here a sell-side liquidity sweep. This is our sell-side liquidity sweep. Wait for a market structure shift. For me, this is my market structure shift. Displacement above this inverse fair value gap right here. You can wait for a market structure shift above this swing high right here, but sometimes the price will left you out. Now let's wait for price reaction into this inverse fair value gap. And as we can see, price reacted into this 3-minute inverse fair value gap beautifully, and it should now continue moving higher. Let's see if we're going to have a fair value gap around the market structure shift. And let's wait for another candle. And alright, so right here, let's see. We have here a fair value gap, but the price barely went into that fair value gap. You can enter right here in this retracement since we have here an breaker block. This is your breaker block. You can enter right here. This is the 3-minute breaker block. Remember, PD arrays are the true support and resistance. Price should react off in this breaker block. If not, it should react into this 3-minute inverse fair value gap, and then it should continue moving higher. You can enter in this breaker block from this retracement right here, and the price should move higher. Price went into that small fair value gap. You can enter right there or in this 3-minute breaker block, and let's see. The price is now trying to move higher. And there we have it. It's now going higher. This is my take profit. Almost 2.5 risk to reward. And we have here fair value gap. 3-minute FVG. We should see a reaction in this fair value gap. As we can see, price is respecting that fair value gap and it has now gone higher. We should hit our take profit in, there we have it, take profit hit. Just like that. Very, very easy. Once you have mastered this setup right here, you can use this as many times as you want. You can trade this at the London Killzone. You can trade this in the New York Killzone. You can trade this in the afternoon session, right? But always remember, use money risk management. Always use risk management because losses are inevitable in trading, right? So let's recap. If we are to go higher, we want to see price moving down first, reaching into a higher time frame point of interest, right here, 5-minute balance price range, taking out a liquidity in the lower time frame, sells a liquidity sweep, and then a market structure shift, right here, our market structure shift, entry of that breaker block, and then the price should continue moving higher. Take profit hit at the nearest buy sell liquidity. And there we have it. That's all for this video. I hope you learned a lot from this video. I'll see you on the next one. Peace out.